traders, Raghee here, and probably the most commonly asked question this week for me has been, what do we do as we wait on the FOMC hot zone, as we wait on the statement, as we wait on the presser, and we know that there's going to be a lot of volatility? Well, I'll tell you what, I don't think any of us could have guessed at the kind of crazy volatility that we were going to see as we were waiting on the FOMC. It's been absolutely bonkers. Let me show you what the daily has been doing. And if you take a look at that daily, what you'll notice is, look at these wicks, crazy wicks, very high volatility. And it's difficult to expect follow through in a direction session after session. That's where shortening the time frame and some day trading comes in. And that's what we did this morning. So when things are tough and choppy and follow through is difficult, shorten the time frame, limit the amount of time you need the market to move in a specific direction. That is day trading. So what did we ultimately end up doing? Well, here's something that you can start off with to understand overall direction. And we talked about this in our notes. So then every time I'm in the room, I'm running just a steady stream of notes of what we're looking at, setups, etc. And I send these to members. So take a look right here. On a day like today, with the price action below the Monday close and the open, can we short into HPMR resistance and sell V-score signals? And the answer was absolutely yes. So then take a look here. This is what I'm talking about. Here is your close and open, right? Being below that is just inherently bullish. And I take that day trading sentiment from the daily time frame. That's the first thing I'll think about. The next thing we do is we use that sentiment to set up trades. And that means we wait for the market to move into resistance zones. That could be the clearing range high. That could be HPMR levels. It could be the Fibonacci retreat zone after we breach. These are all things that I teach in my day trading class. And one of the things that I love is a V-score, a volume-based resistance confirmation. And that's exactly what we had. When we get up into an area of either the retreat, or in this case here, you can see we synced up with the V-score. That's the opportunity to get short, get long puts in the SPY or SPX, short the micro or the mini futures. And this is the key. Do not, and I got to tell you, this is something that stings a lot of traders. Do not expect it to go to the opposite end of the range. Look for it to move about halfway down. Right there, gang. If you got nothing out of this video, in a choppy market, whether that be daily or intraday, look for that first target about halfway down. Or at very least, move to a break-even stop loss. That will right there spare you a lot of heartache. And that's exactly what we did. S&P, Dow, NASDAQ, heck, even the Russell. Same idea. Take advantage of the retracement into the resistance zone and look for about that halfway mark on the way down. Was it a lot of downside? No. But on a day where we know we may not get a lot of downside, we may get some crazy wick all over again, and yet the only thing we can do is look for weakness based on the price action that we are getting. That's a powerful way to do it. All right? Shorten the time frame. Tomorrow, we're going to have FOMC. And that means we're going to have a lot of volatility that is going to give us some clarity on where we'll be able to find the next relative outperformer. Now, take a look at this. I know it's very busy, but it's something we'll talk a lot about in the aftermath of the Federal Reserve. All right, we've talked a lot about CHOP over the past, I guess it's 3 or 4 weeks now, using Darvis levels and a stochastic. The next thing we're going to segue into is watchlist building. And that means finding relative outperformers. That means looking at the tide and looking at the individual boats and finding out where your relative outperformance is. And so what a layout like this is, which is my multi-charts layout, is the index followed by the top 11 weighted names in that index or in that sector. And we look at it based upon the structure of the market. In other words, what is the momentum? What is the trend? What does the 8, 13, 21 exponential moving averages say? What does the wave say? You can see that's measured in each one of these. We're going to be moving into this conversation after the FOMC and into next week, but we'll put together a lot of the choppy market conversations that we've had and now start to look for relative outperformance. And by the way, keep an eye on the XLP for relative outperformance. Maybe not at the tide level, but look at some of these boats. Even things like Colgate and Kimberly-Clark and Pepsi. A lot to like in XLP, which is largely considered defensive, right? So if I start to see weakness in the indices, I start to ask myself, where could I see money drive to? This is how we do it. Hope that helps. Leave any questions or comments that you might have for me right here at the YouTube channel. And if you would, smash that like button on the way out. But even more importantly, let us know if we're heading in the right direction with the content and what you need from me to help you along your trading journey. All right, gang, be good to each other. I'll see you in the next update. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.